my portfolio reached $5,000 in value, and in this video, we will take a detailed look at my investments. But before diving in, if you like this type of content where I show my portfolio in full transparency and provide an update every single week, then make sure to hit that like and subscribe button. It helps the channel grow and it puts my name out there. Also, this video was recorded on March 8, 2022, and some values may vary. Let's continue. My portfolio value is sitting at $5,005.88 with a dividend yield of 3.49%, which equals to $174.90 in annual dividends. The portfolio is built with companies that can withstand economic headwinds, provide cash flow to its shareholders, and grow their dividends year over year. Companies that are known in the dividend investing community, so hopefully you'll recognize some of them. In my portfolio, I currently have Apple, Colgate, Kellogg's, Coca-Cola, Realty Income, Stag Industrial, Procter & Gamble, Corning, Waste Management, Clorox, AT&T, Kroger, Archer Daniels Midland, Kimberly-Clark, 3M, and Starbucks. It's a well-diversified portfolio when we look at the sectors and dividend growth of each. On the next column, we have the corresponding ticker to each company, and next to it, we see the amount of shares that I have for each company. Later in the video, I will show the diversification for the allocation and sector. Then we see the market price, which is the value that the stock currently has. Then we have the average cost. That's the average of all purchases that I have made within a stock. Capital gain/loss is the profit or loss that I will get if I sold my position. Greens are the profit and red are the losses. Then we have the dividend yield. This is self-explanatory for dividend investors. Next to it, we have the dividend payout per share for quarterly dividends, or in the case of Realty Income and Stag, that they pay monthly. Next, we have the annual payout. This is the amount that one share will pay me in dividends for 1 year. And the last one, annual payout per position. This is the amount that I get per year for all the shares I own. Heading back to the capital gain/loss column, we see some companies that are deep in the red, like Clorox for the pandemic hype loss, AT&T for the spinoff and dividend reduction, Kimberly-Clark for inflationary headwinds, and 3M for the earplug lawsuit and not so high revenue last quarter. I'm perfectly okay holding these companies, as I know that in the future, they will just be fine and continue to provide cash flow throughout dividends, where I will manually reinvest to buy more and more shares. Right now, I'm focusing on buying core blue chip companies to create a steady compounding cash flow. For the upcoming months, I will be buying between 3M, Kimberly-Clark, Clorox, and in some occasions, I will add small tranches to Starbucks and Waste Management. I also have some companies under the radar that I will start positions soon, so I will give you an update when that happens. Looking at the allocation of my portfolio, we have Apple, Realty Income, and AT&T as the largest holdings. This makes it look risky as all of them have over 10% allocation. I don't feel that's risky at all. My dividend investing journey is pretty much starting as I contribute more to the portfolio and open other positions. This will level out the allocations for those big holdings, and as I mentioned before, I will be focusing on the core blue chip companies, and long term, this will balance itself. Moving forward, this is the percentage of my stocks belonging to a sector, usually called the sector allocation. Consumer defensive 35.6%, technology 20.5%, real estate 20.9%, consumer cyclical 4.1%, communication services 10.5%, and industrials 8.4%. My biggest sector is consumer defensive, which is my favorite. It's called defensive for a reason. They do not provide the best returns, but they can fight against any economic situation, and they have done that throughout decades. These are companies that sell a product that we need regardless of where the economy stands, such as TP, water, canned food, toothpaste, and the list goes on. By sector, my portfolio is well diversified, but at the same time, it's something that I personally do not give a lot of attention, because I know that the companies that I own will be fine over time. I started dividend investing in 2020, and at the end of each year, I write down the value of the portfolio, just so I can see how much it is growing. I added the current value of 2022 for example purposes as the year has not ended yet. So again, I started investing in 2020, only $30 per week, and the ending value is $1,835.39. In 2021, the contributions remain the same, $30 per week, and the ending value is $4,257.41. This is a 131.96 increase compared to 2020. The current 2022 value is $5,005.88 and is currently 17.58% increase compared to 2021. The contributions for 2022 is $100 per week, and I believe this year we will end with a 100% or more increase compared to 2021. The current performance of my portfolio versus the S&P 500. Over the short term, my portfolio tends to beat the market, but over the long term, it tends to stay behind. I know it's difficult to beat the market, so I see it as a fun challenge. Remember that the purpose of my portfolio is to create a stream of income that can fund my retirement. Beating the market would be cherry on top. In conclusion, that's the full update of my portfolio. I'm pleased with the growth that is bringing in value and dividends. Can't wait to continue giving updates and contributing more. Hopefully, I will reach all my year-end goals and continue reaching milestones just like the $5,000 value. Thank you for watching, and I'll see you guys in the next video.